kind of a controlled demolition going on. Like the one big impediment between the implementation where we are today and the implementation of a CBDC is the commercial banking sector, right? Like the CBDC would basically it would obviate the need for commercial banking entirely. Everyone would just have an account directly with the Fed. So it's kind of interesting to me that, one, they've hiked rates. So you're actually giving depositors a big incentive to move their deposits into either large banks or, treasury bonds, things like this. Specifically treasury bonds to get the yield. And then two, like Janet Yellen and these others are sort of representing that, okay, the big banks will always have all their deposits guaranteed, but the smaller commercial banks, it's less certain whether they'll have their deposits guaranteed. So they're like making the commercial banking system out to be much more risky, which is, I guess, incentivizing depositors to move into big banks or into treasuries. And it feels like kind of a controlled demolition, right? If you can wipe out the commercial banking sector or create a lot of doom and gloom, you could set the stage for the rollout of a CBDC in a way that's introduced as a solution to the problem that, of course, they themselves create. So it just feels like a lot of central bank bullshit going on in the world. And if people just understood that Bitcoin is a full reserve bank, that's all you really need to know, right? Like the Fed disallows Custodia Bank from coming on the scene because they're a full reserve bank, and that threatens the business model of all fractional reserve banks. The same reason the Fed disallows Custodia to have a banking charter is the same reason they're so deathly afraid of Bitcoin. Right? There's a natural demand for full reserve, low risk banking, obviously. But the fractional reserve paradigm that we're in has prevented people from having access to that for a long time. So thankfully we have Bitcoin.